Good morning, everyone, and welcome to the Morning Edge webinar. We did see the dollar back drop down and actually went, I think, to the pip, or just about to the pip, to our support on our bias. 622. $6.24. And the euro has rebounded off of that 624, which I was up by 2 pips, to 672, and right now we're at 664. So we'll go over the news today. I mean, it's relatively quiet right now. We saw also gold pull back. And things are relatively quiet. Let's see, Swiss National Bank Chairman Jordan says overall Swiss economy would suffer if Swiss interest rates go up. So let's go and take a look at the news. We have the ECB today, have jobless claims. See, we've got ECB at 7:45, then the press conference at 8:30. At 8:30, we have building permits, jobless claims. Let's see. Canadian manufacturing sales at 8:30. Philly Fed. That's it. So we'll go back into the news. We really don't care about Davos. So Yellen, boosted the dollar. We're basically looking for that, because then she's not going to back away from, all of a sudden saying, oh, we're really not going to raise. And you can see all the other Fed governors also chiming in. Everybody's basically singing from the same hymnal book. So we'll cover the news, then we'll take a flyby on stuff, and then we'll do some analysis. So for the most part, remember what we're looking at on the Aussie dollar, and the market did back off. Now the Aussie dollar is trucking along right now, but we're looking for the potential for a nice little correction, and the Aussie and the Kiwi that reached those levels. We talked about the cup and handle. Since the dollar held firm against most of its major rivals on Thursday after a speech by Fed Chairman Janet Yellen halted its worst run in 5 months by promising new rises in U.S. interest rates this year. There's no reason why she wouldn't, so that's the saying. You look at things in context, just like we said, even though our focus is very, very short-term oriented, we talked about how coming into the new year that Donald Trump would be crying foul against the strength of the dollar. And obviously that came a few days ago, and then we saw the dollar pull back and the euro respectively go the other direction, heading to the 716, which is an area that we pointed out where we're up by 4 pips on that one, about as far as where they would take a pause. So let's see. The greenback gained as much as 2% on Wednesday after Yellen's speech, which turned investors back to the narrative of strong growth and rising inflation, which drove the currency higher after Donald Trump's election victory in November. A correction since late December means the currency is still in the middle of its worst 4-week performance since August, reflecting concerns that Trump would prefer a weaker currency and more generally may stoke global geopolitical uncertainty. Well, we've already been talking about this since the very first of the month. And here we are on the 19th. But Fed policymakers' expectations of 3 rates this year are the bedrock of predictions for more dollar gains. We have washed out a few positions this week, and we're back to thinking about the underlying fundamentals, says Jeremy Stretch, head of currency strategies at CIBC London. Yellen's comments are interesting and constructive overall, but the market does not want to be caught long ahead of the president-elect speaking on Friday. For now, it's cautious dollar buying rather than anything stronger. The dollar index inched up 0.2% in early trade in Europe. It was marginally stronger at 1470. Yen had given back about 0.2% of its gains against the euro to 646. Yellen is due to speak again late on Thursday before Trump's inauguration on Friday. The dollar sell-off on Tuesday was driven by the president-elect's claim that the strong currency was killing us in trade ties with China, and says they would expect to inject a Republican initiative on broader taxes, which had been expected to support the currency. Of all the speakers we're getting, the one I'm going to listen to for now most will probably still be Janet Yellen, Société Générale strategist Kid Jukes. As the U.S. economy approaches full employment, no, dude, we're at full employment. And believe me, when you compare this to where we were in 2008, it's like frickin' night and day. But inflation rises nearly as quickly. How hawkish the Fed dares to be will determine how much the dollar rises. The day's other big set piece is the European Central Bank's policy decision and the news conference, though expectations of another strong message that would move the euro are limited. With growth and inflation picking up pace slowly, the bank is expected to argue that its stance on loose monetary policy is still needed to keep the economy or keep the recovery on course, even if that raises nerves in Germany over rises in inflation. It'll be interesting to see whether the ECB's Draghi is pressed in the briefing on any degree of dissent within the council. CIBC Stretch said, I'm sure that they will offer that or ask about that. Sterling, which has jumped 0.3 on Tuesday to vault above 124 after British Prime Minister Theresa May's Brexit speech was traded at 123 per the dollar, having fallen sharply on Yellen's speech. We talked about that. Actually came right into our support. It just held just above it. We showed that 22.46 was that key level, and 22.52 being the 38%. So let's take a look at the Aussie dollar and Kiwi. Aussie and New Zealand dollars came off multi-week highs on Thursday after the U.S. counterpart staged a sharp rebound after Fed Yellen suggested U.S. interest rates could rise quickly this year. The Australian dollar was sitting at 75 in the late morning trading as it drifted away from a 2-month high of 75.69. Remember, that was our area right there. Analysts see the chart support. Remember, our resistance was at 75.72. And we're off. We showed that yesterday off by 3 pips. Analysts see the chart support in the 74.65.47 zone as they remain cautious ahead of the U.S. President-elect Trump's inauguration. For odd moves around the inauguration, it would come down to whether Trump puts more emphasis on a stronger U.S. dollar or on protectionism, says Matt Simpson. Any talk about a strong greenback would provide odd support, which protectionists and tariffs would likely weigh on commodity currencies. The U.S. dollar, which hit a 14-year high against the vexed currencies after Trump's upset victory in November, has had a rough start to the year. But Yellen infused new life into the greenback on Wednesday when she said waiting too long to begin moving toward the neutral rate could risk a nasty surprise down the road, either too much inflation or financial instability or both. Locally, employment data for December failed to inspire traders, with the jobless rate ticking up to a 6-month high, even though full-time work rose for a 3rd straight month. The bigger picture is that the labor market still looks fragile, says Paul Dales, chief economist at Capital Economics. These guys are some of the very best in the business, Capital Economics. If there's a firm you want to follow, it's Capital Economics. Do you want to know what the U.S. dollar is doing across the board? Morgan Stanley. They're your team. Across the Tasman, the New Zealand dollar was subdued after skidding 1.3% in its biggest one-day percentage loss since November the 9th. Kiwi stood at 71.21 from a high of 72.19. Economists at Westpac expect the Kiwi to sink to 68 in the next 3 months due to a rallying U.S. dollar. New Zealand government bonds sending yields to 12.5 basis points higher at the long end of the curve. And we'll go to the next piece of news, which will be the last piece of news. Gold under pressure as Fed Yellen backs gradual rate hikes. Gold prices were down on Thursday on a strong dollar after Fed Chairman Janet Yellen advocated lifting interest rates gradually. U.S. gold fell as much as 1% to 11.97, while the U.S. economy close to full employment, inflation headed toward the Fed Reserve's 2% goal. It makes sense for the U.S. Central Bank to gradually lift rates, Fed Chairman said on Wednesday. Yellen's speech was interpreted as being bearish for gold, said international FC Stone analyst Edward Marr, adding that the metal could be under pressure later in the day as Fed Chair speaks on U.S. monetary policy again on Thursday. Dallas Fed President Robert Kaplan on Wednesday joined the chorus of central banks I already mentioned. They're all singing from the same hymnal book. Joined the chorus of central bank officials making a case for a gradual hike in U.S. interest rates. We would view any short-term weakness as a buying opportunity in gold, given that we do not think the Fed will be pushing the higher rate trajectory story so aggressively over the short term, Meyer said. The Fed would want to wait first and see what kind of fiscal policies Donald Trump formulates and sends to Congress. I don't believe this part. This guy's off his frickin' rocker. He doesn't know what the hell he's talking about on that thing. The Fed's not going to be looking at what policies Donald Trump is formulating for their next Q. That is one of the most ridiculous things I've ever seen someone say. The U.S. consumer prices increased in November as households paid more gasoline and rental accommodation, leading toward the largest year-over-year or year-on-year increase in 2.5 years, signaling that inflation pressures could be building. Positive data usually puts pressure on gold prices because investors raise bets on U.S. interest rates hikes that would increase the opportunity cost on holding non-yielding bullion. We can still say there's an inverse relationship between the dollar and gold as we are waiting to hear from Trump on his policies. We can expect random shocks from him, said Mark To, head of Hong Kong's Wing Fu Financial Group. There should be some consolidation around the $1,200 level for some time. President Lux has called for tax cuts and more infrastructure spending, which has boosted U.S. shares, and the dollar had seen a sell-off in treasuries. His protectionist statements and off-the-cuff tweets have led many investors to opt for gold. Okay, so we will take a look what's on the horizon. Okay, so we have housing starts coming in at 8:30. What's building permits? Of course, it's Thursday, so of course we have jobless claims. Prior was 247. They're looking for a slight rise to 254. Manufacturing sales for Canada. Philly Fed Index. So a whole slew coming in at 8:30. Then after that, get quiet as a church mouse. So so we'll take a quick flyby before we get into some analysis. I guess we should read a little bit because of the ECB and the next half hour. So we'll take a look at the euro. I guess we'll start to size things up. So I was looking for support at 624. Boom. And the reason we thought we were going to have to move down there, and we'll look at the 30-minute. The reason we thought that was because of this. I told you that we had done a lot of work up in here. Here's our 716. We had talked about, but we did a lot of work here. So my thoughts were, as we come back in here, we've spent so much that we're going to have to go lower. Because remember, we talked about 644. And but we said, hey, look, considering how much work they've done, and then Janet Yellen's going to be speaking, so I thought that would be bullish for the dollar. She's not going to go in and turn around and just like, pull a 180 and go the other direction. So Rio's asking about euro pound. I don't recommend buys or sells, and I don't pay that much attention to cross rates. We can look at the euro pound, but I don't recommend buys or sells on the show. I mean, I'll say where support is. I'll probably pretty much give an indication of which way I'm leaning to, but to say buy or sell, I don't do that. And neither did Blake, because Blake would always say, he gave up his license years ago, so I will do, just like the euro. I suggested, like right here, we've done so much work, we're going to have to head lower. Now, if you want to go in and think, okay, well, that means a great area for a short, fine, which we were looking for down here, and we say eventually we're going to get up to 758 before we see a markedly significant correction. Before, we have the opportunity to eventually go to take out those prior highs above 8. But, so like I said, I will provide the analysis to suggest, that we're going to make a move, down here. But to actually outright say buy or sell, I don't do that. So, but anyway, we did the work here, and we looked at it, and we said, hey, look, it's done so much homework here. We were already expecting a pause here from the 716. We said we're looking for 25, maybe 35 pips, which we got just a little bit beyond the 35. Came back up here, and then we started to slide back down. It looked like that was going to be it. But then they tried to make one more run, and like I said, we've done so much work here, and it wasn't like you were going to think that Yellen was going to. The only reason we could pop back up here and move towards that 758 was going to be if Yellen said, well, we're going to have to just look at things closely. That would make no sense because she's been arguing that point that they have to be ready. And then, like I said, all the other central bank governors have been saying, saying, hey, look, we're probably going to have to raise a lot sooner and so forth. So it would look silly if she turned around and just does a 180. So, and the economy doing relatively well, despite what a lot of people have been saying over the course of the last 6 or 7 months. That's the reason why, we've had the dollar strengthen so much. Because at this point, you would look for the Fed to continue to raise rates, not like a one and done type thing. So that opened the door for us to go lower. Hence, we went for 624, and we'll go into we came up with this support 624. And we were talking about this being the bottom part of the zone because we said you had to look at it and say, okay, you don't expect the dollar to take off from here to Venus, but it was within reason for support. You had to be give a little bit more space than 644. That's what came with the 624. There's our touches. I pretty much do everything by the touches. I said that we're probably going to get to 758 before we see a markedly recognizable correction. And then I think there's a possibility we can get above, eventually there's a possibility we can work ourselves up to above 865. But we'll have, as I said before, we'll have to see how the market reacts. Now, at this point, resistance, we have this 716, but we're going to stick with the 758 because that's really what we're looking for before we think we can see a more significant pullback. So we talked about, hey, look, we're going to get a pause here, but you want to really be looking at this from a bullish side with the thought that we're going to eventually get up here before we see a correction. So you'd be saying, okay, where can I buy? I don't want to, bet the farm, but come in at areas. That way, if it got past the 624, then you got this 38% and look for an eventual move. Now, obviously, if something were to happen and Yellen had flipped then yeah, then we could turn around and say, oh, we're eventually going to keep going lower. But at this point, it didn't look like it. And you remember everybody was talking about, we're going to parity, we're going below parity. You just have to see how things change, and you have to look at things in perspective. We talked about how the euro held up really well on these tests down here, these three tests. So we're going to keep resistance at 750. I think we have it at 758. We'll have to look. Yeah, 758. So that's going to stay the same. So we'll have to see what happens when the ECB makes a decision. More importantly, in the press conference where Draghi says. So we'll go and take a look at the cable. We had support here in the cable at 22.46. You see that? With the 22.58 confluence of the 38%. And we said resistance back to the same area, this 23.62. So that's where we're at. Nothing has changed whatsoever. We talked about this day before yesterday when cable took off, and we were talking about on the way up, that 38, this is the 30% on the way back. We were talking about, I think it's right in here. There was a 38% running here, and how they got back above it. And we said, wow, they're pushing it. Where's the target, as far as where they can get to, that they'll be looking at. They're looking at, hey, I'm long. How far can this thing push? So we thought it was this 23.62, and we were talking about if it gets above 23.62, which it was, I was thinking, saying, hey, look, it's running on fumes. But I'll tell you what, they ran a long way on fumes. They got up to here, which was 23.81 was a 50%, and they hung around. And they even gunned some people above 24. But once we got into Asia, the wheels fell off the caboose, and we just started heading lower. And so when we came in yesterday, we're like, where can it go to? And we talked about the significance of this 22.46 coming across. You see that? All the way from back in here. So we didn't make it all the way to 22.46. We stopped just before there, and 22.52 was the 38%. Get a little bit closer look. $22.53, actually 52, and that's the 38%. And you had this right here, so you knew people were looking to do some short covering. So at least that much. Whether they're going to be buying straight up, I don't know, but that was going to be an area that you look for support. So it's going to stay the same with resistance at 23.62, support at 22.46. Nothing changes on the cable. So let's go to the odd. There's our cup and handle we talked about. And our projector was 75.72. It got to 75.69. Then we saw a reasonable pullback. About 70 pips or something. I think we had our support here at 74.25. Remember, just below. Nothing's changed. This is still resistance. If you want to say, wow, it's mounted, and we talked about this, we'd see, in all likelihood, a pause right here. Okay. So let's update this because we said, hey, look, it loves to trend. Maybe they'll tack on one more run. So we'll update this to say that would be your new resistance, 76.30, right there. And we'll pull this back. And you can see the significance of the 76.30. So we'll update that. But we did reach our cup and handle. It might be a busted up looking cup and handle, but anyway, I'm not, like I said, once again, I'm not an aficionado. Look, it confluenced with the 61%. That was, I said we would see some longs taking some profits here. Could have even been more so. So, props to Aussie dollar still trucking along. We talked about how this thing loves to trend. So 76.30 would be the resistance now. We're doing our analysis a little bit early because we have the ECB. Yeah, I don't know what you're talking about. Menachem says, is there a chance that we can have uh, clear charts, bigger and clear. I don't know how much more clear you can make it than that. I don't know. I mean, I haven't had not one person complain about the charts. Is there any chance can we have bigger and clearer charts? I don't know how much. I've been using NinjaTrader for 10 years, and there is not another software package that provides the clarity of Ninja charts. And I don't know what else I can do for you. It's a 2-hour webinar. It's free. So I don't know what to tell you. And there's not a, this is one of the things I like about NinjaTrader is its clarity. So I'd give you back your money, but it's a free webinar. Yeah, Menachem says Blake's charts were clear. Well, I do. You know what? I apologize you're not satisfied on the free webinar. I think some people were satisfied with some of the calls that have been made on this. So I understand that some people are just going to say, you know what? No way you'll ever measure up to Blake. And you know what? I'm not trying to replace Blake. I'm just trying to do the best job I can with some very decent calls here. So, you know, if you want to compare my charts to Blake and say they don't look as good as Blake, you know, I don't know what to tell you. Some people are going to be that way, to be quite honest with you. I've had, you know, very positive response from the listeners. No one's tried to say, well, you don't do this like Blake. If you know, this was our target here, 75.72. It was mentioned since last week. If you want to criticize me for my charts, I don't know what else to go and tell you. But the calls have been pretty good. Yeah, I see some other guys making some comments, and I appreciate the support. What I'm saying is like, I said that from the get-go. You know, and we've spent time the first week and a half or so. You know, lots of y'all would ask him, hey, how do you come up with support or resistance? We went into detail about how I look at the touches, because maybe my analysis is a little bit different. And I said there's no, like Blake likes to say, there's no right or wrong way. But I don't think anyone can argue with the calls I've made. Here was a target from last week, 75.72. I mean, the calls on the euro have been nothing short of ridiculous on the way back to 460. To I think it was 480 here, 716, 624. But there's always some people that are just going to complain. So I don't know what else they're going to say about that. So the next target would be 76.30. And we'll go and move into the next one. So the next one's going to be the Kiwi. I mean, here's a Kiwi. We talked about the 72.25, the bias pivot, and we even talked about, look, and there's a resistance at 72.25, and it wasn't. I didn't put this yesterday. That 72.25 has been there for a couple of days already. That we said was going to be our resistance, our target here, that they would be looking for as far as, you know, this bias pivot, and we saw a pretty good pullback, you know, against that. You know, it looks like about 100 pips. It's still going to stay the same. I mean, we have the 61%. We even said there's a chance they can try and squeeze them up here, but obviously there's concerns, and we saw that some guys are actually looking for, I think the Westpac guys, which they follow this stuff pretty closely, the Aussie and the Kiwi, are looking for 68 cents. So they're really looking for the wheels to fall off the caboose on this thing down here. But this has been what we were looking for, the 72.25. We saw a pretty good pullback. We saw a rally back, and then starting to fade. The 72.25 is still going to stay the same. And I don't know where I had resistance, but I would feel more comfortable with this 70.53. Let's see where we had resistance. Yeah, 70.53. So, and look, if we're failing here, right here, you would think that they're going to take out the lows here and then shoot for this. They'll probably overshoot it to a certain extent, so we can take a look at a fib. So if they overshoot this, 70.41 would be the 50% of this move. So let's and 68.62, and the high was 72.20. I mean, holy smokes! I mean, our resistance on that missed it by 5 pips. So I'm just kind of baffled. Some people want to gripe about stuff. So I would say the support, you'd be looking more towards a 70.53 here, right in here. Let me move this. With an overshoot here, because this was our bias pivot, and we talked about the significance of this. You see how it's, and the reason I say a bias pivot, because look at how the reaction is. We get below it and we shoot up. We talked about this yesterday, day before. We drop down and we shoot up like a rocket. We drop down, we have a little bit of a battle, and then as blue skies ahead, we drop down and we shoot up like a rocket. Once we lose it big time. That's what I'm saying, that this 72.25 is a bias pivot. And that actually held up here. Well, now it's kind of getting pushed back here. So a break here, if we're going to take out these lows, we're going to come down here around this 741, maybe even 70.29. Like I said, the Westpac guys are looking for 68 cents over the next 3 months. That's a pretty big fall, but I'll tell you what, it's going to be pretty hard trying to get past this 72.25. So let's go to the dollar CAD. This one really took off because we talked about we had to spread it out because of the central bank decision. This is where it looks like they're going to, this 33.10 right here. I mean, what a heck of a run. I told you those guys, you know, people were looking for them to raise. I told you those guys, they do the opposite. That's why I didn't want to pay attention to them. Oh, Rod says the Westpac guys, for what reason? Oh, I was saying that they follow the, I'll go back to this, Rod. I was saying that they follow the odd and the Kiwi and the, I was saying Westpac, they're looking for 68 cents on the Kiwi. And so they follow that and the Aussie dollar pretty close. They have pretty good stuff if you ever get a chance to read their stuff. So you kind of, it doesn't mean you follow them blindly, but whenever they're making a comment, at least you want to let your head perk up a bit. I think let me see, we're way over though. I'm taking a break now. Forgot the break with all the stuff, so we'll be back. Thanks for joining us.